Welcome to the deep dive. We've got quite a stack of sources today, and they're all zeroing in on one thing, a pretty massive, definitely head-turning surge in the Pi network. You probably watched the crypto market this past week, right? And well, for the most part, it was kind of steady. The general market maybe saw a 2.5% bump between October 26th and 27th, 2025. But Pi Network, PI, it just decided to, well, launch, clocking in this explosive, really rapid surge over 22% in just 24 hours. So our mission today is to try and cut through the noise here. We need to unpack this complex mix of technical signals, macro factors, and fundamental progress that seem to fuel this pretty extraordinary growth. But we can't just stop there. A move this big, this fast, it brings serious risks. So we're definitely here to highlight that caution tape too.
That's exactly right. This wasn't just random noise. It really looks like a specific chain reaction. To get why that 22% jump happened so fast, we really need to break down the four interconnected catalysts the source material points to. So you've got a distinct technical breakout, then a sudden sort of supply shock, a helpful macro environment, and critically, some big success in their actual project roadmap.
Okay, let's unpack this then, starting with the mechanics. A price doesn't just jump 22% without giving traders some pretty strong signals, right? So what specific technical readouts were telling the market, hey, a breakout's happening?
Well, the charts were practically screaming reversal. They were signaling that the sellers were kind of running out of steam. The PI price didn't just break cleanly above its 7-day moving average, which was sitting around 0.207 cents, but it actually went on to test that first major Fibonacci resistance level at 0.251. Successfully tested it. But the deeper confirmation, I think, came from the pattern analysis. Technical traders spotted this formation, what they call a falling expanding wedge pattern, showing up on the daily charts. And that pattern, it's often read as a pretty decisive sign that a long bearish trend is about to snap back, violently sometimes.
Okay, so the pattern set the stage for buying. Did the momentum indicators back that picture up?
Oh, absolutely. The RSI, the Relative Strength Index, the 14-day one, it totally confirmed that renewed buying interest. It had dipped way down to 32, which is, deep oversold territory. But then, boom, during the surge, it jumped right up to 46, firmly back in the neutral zone. That kind of swing really confirms that the market had soaked up the previous selling pressure, and yeah, fresh money was coming in.
So the charts looked good, but like you said, nothing happens in a vacuum. You mentioned macro tailwinds. How did the bigger global market picture kind of amplify PI's move, especially since most other altcoins were pretty tame?
Right, we got to connect it to the wider market feel. This surge didn't happen on some random Tuesday. It was timed with some pretty significant market optimism. You had Bitcoin, the big one, hitting $116,000, gaining about 2.4% that day. And that was fueled by positive news, mainly optimism around potential U.S.-China trade talks and maybe some cooling inflation data.
Okay, that makes sense for Bitcoin, but why did PI take that good vibe and turn it into a 22% jump? That seems like a huge amplification.
Yeah, and that's where the correlation comes in. It's fascinating, actually. The source material highlights that PI has this remarkably high correlation with Bitcoin, measured at 0.87. When you have that kind of tight link, any positive move in Bitcoin basically acts like a massive lever for the correlated asset. So while the average crypto might gain 2.5%, PI's high correlation meant it really caught those macro tailwinds and just, well, converted them into an explosive move, left most of its peers in the dust.
Okay, here's where it gets really interesting for me. Because the technicals and macros set the stage, right? But the really specific drivers seem internal. Let's talk supply. What happened to the token supply to create what you called a supply shock?
Yeah, the shock was quantifiable and pretty immediate. The sources show that over 10 million PI tokens just vanished from exchanges in that 24-hour window. You got to ask, where'd they go? Well, they moved into private wallets.
Right. And when tokens move off exchanges, that means they're not immediately available to sell, right?
Yeah.
Less selling pressure.
Precisely. It just instantly shrinks the pool of tokens available for immediate sale on the open market. And the market tends to read that action, holders pulling tokens into self-custody, as a strong signal. It suggests long-term belief, HO dealing. It basically communicates confidence in where the ecosystem is headed. So fewer potential sellers meant the demand, driven by that technical breakout we talked about, has a much bigger punch on the price.
And that confidence seems clearly tied to a really big achievement on the network side itself. That's the fourth pillar, right? The main success. What happened there?
Yeah, this is probably the most critical piece for the project's long-term story. The network hit this huge milestone just in the last week of October 2025. Get this, 2.69 million verified pioneers successfully moved their holdings onto the mainnet.
Wow, 2.69 million.
Yeah, that number, nearly 2.7 million actual users completing KYC, migrating their assets. That sent a massive wave of positive sentiment through the community.
That's huge user adoption. And it must be fueling excitement for the next big thing on their roadmap, that planned ISO 2020 integration. Now, for listeners who might not track global financial messaging standards daily, what exactly is ISO 2022 and why is integrating it such a big deal for a crypto network?
That's a really important question because, yeah, that jargon, it matters here. ISO 2022, put simply, it's the new global language for electronic data exchange between financial institutions. Think of it like the universal translator that banks, central banks, payment systems, they're all adopting it worldwide. For everything from cross-border payments to market infrastructure, it's becoming the standard. So if Pi Network pulls off this integration by November 22nd, like they plan to, it signals a massive potential leap in real-world usefulness. It means the network is, technically at least, positioned to potentially talk to and work with legacy financial systems all over the globe. That ability, bridging TradFi and crypto, that's a huge potential value add. And seeing 2.69 million pioneers successful migrate just adds a layer of credibility to that goal.
Okay, so we have this, perfect mix unfolding. Technical readiness, market support, a supply squeeze, and this major operational win promising future utility. That really paints the picture for the 22% surge. Now, though, we absolutely have to pivot to the risk, because when something moves this fast, the caution tape comes out immediately. What's the number one warning sign the sources flag about short-term volatility?
Yeah, the biggest red flag is just pure raw speculation.
Yeah.
I mean, the 24-hour trading volume spiked an absolutely crazy 1,089%, reaching about $100 million USD. A volume explosion like that, it doesn't really represent steady, healthy buying. It screams massive speculative frenzy, FOMO, fear of missing out, driving short-term traders. And we can actually put a number on that risk using the volume market cap ratio. It hit 5.48%.
5.48%. That sounds high.
It is significantly high. It's a definite red flag. It tells you the asset is being churned, traded way too aggressively compared to a total value. That signals a high risk of a sharp pullback, driven purely by people just taking profits off the table.
Okay, so that's the risk from the speculative frenzy. But there's a deeper sort of structural threat hitting the supply side next month, that token unlock cliff you mentioned. What are the numbers we need to watch for in November 2025?
This is, arguably the biggest immediate hurdle. There's this massive wave of potential selling pressure scheduled to hit the market square in the face in November. The sources point to somewhere between 121 million and 172 million PI tokens being unlocked.
Wow.
Yeah. And based on recent prices, that translates to roughly $35 million USD worth of tokens becoming available to sell.
And crucially, this isn't just a one-off event, right? This is an ongoing thing for the next few months.
Exactly. It's not a single hit. This recurring unlock pressure, that 121 to 172 million PI range monthly, it continues right through January 2026. So the key question this raises for the community is, frankly, pretty brutal. Is the current growth, the mainnet progress, the excitement about ISO 2022, is it actually enough to soak up a $35 million monthly supply dump without crushing the price? That's the real stress test coming up.
That is immense pressure. And beyond that specific supply issue, the sources bring up these other structural hurdles, totally separate from market action. There's one figure I want to highlight that honestly is kind of shocking for a project that talks about decentralization.
You're talking about the centralization data. It's pretty stark, yeah. 96.37% of the circulating supply is held in just the top 100 wallets.
96.37%. When you hear that number, what are the immediate red flags? I mean, that sounds terrifyingly centralized.
Well, it creates this vulnerability that goes way beyond just market swings. It basically means the long-term price isn't really controlled by those nearly 3 million pioneers who just migrated. It's controlled by a tiny group of whales. Any coordinated move or even just a few big decisions by those top 100 wallets could theoretically crash the price instantly, regardless of market sentiment or, how well the project itself is doing. That's a major structural weak point that kind of undermines the whole decentralized idea, doesn't it?
It really does.
And on top of that, they still face the challenge of limited real-world use cases, beyond the promise of ISO 2022. And they're still not listed on the truly top-tier global exchanges. We're talking Binance, Coinbase. Their current listings, places like OKX and Bidget, they're okay, but they limit the global reach and the overall liquidity compared to the big players.
Okay, so pulling all this together, the powerful technical breakout, the big fundamental wins, but also these huge centralization and supply risks. What does it all mean right now? Let's give the listener those key technical levels, the resistance and support they need to watch.
Right, the immediate focus has to be around $0.28 USD. That level is a critical short-term line in the sand. Holding above that signals real strength. So we can sketch out two likely scenarios based on this data. The bullish scenario, let's give it maybe a 60% probability short term. The trigger is a sustained daily close above $0.28, ideally on good volume. If that happens, the path seems to open up towards the next resistance target around $0.36 USD. That's potentially another 41% gain from where we are.
Okay. And the bearish side, given that crazy volatility, a pullback feels pretty possible too.
For sure. The bearish scenario, let's say 40% probability, the trigger point there is a drop, and critically, a daily close below that short-term support of $0.25 USD. If it fails there, that would likely kick off the profit taking we discussed. It could push the price back down to that stronger support zone between $0.20 and 21 cents. Or, worst case, potentially drag it all the way back towards the all-time low area, around 11.17 cents. So traders really need to watch $0.28 for the green light and $0.25 for the red flag, meticulously.
Right. So this deep dive, it really shows that 22% surge wasn't just luck. It was this precise mix. The falling wedge pattern, that big supply shock off exchanges, the macro boost thanks to Bitcoin's correlation, and then the success of migrating almost 2.7 million pioneers right before this critical ISO 2022 push. A perfect, if maybe fragile, storm.
Exactly. So the key takeaway for you listening is really twofold. First, watch that price action around $0.28 very closely. That's your confirmation trigger. But maybe more importantly, brace yourself for potentially extreme volatility and high risk as we head to November's token unlock period. That incoming supply, up to 172 million tokens, that's the real test of whether the community can absorb it.
So wrapping up, what does this all mean? The sources definitely show this huge push in development and user migration, all aimed at building real ecosystem value, with ISO 2022 as the big symbol. But given that, frankly, extreme centralization, that 96.37% in the top 100 wallets, and the massive looming supply unlock hitting over the next 3 months, the central question for the future maybe isn't just if they can integrate new standards. It's more like who ultimately controls the long-term price and the token's destiny when potentially hundreds of millions more tokens flood the market. That's definitely something for you to mull over as you track those key price levels.